Hi guys, welcome again to another episode of Financial and Insurance Proficiency. My name is Jane Dishu and thank you very much for choosing to pass by and watch this. So in today's topic, I'll be discussing the most essential part in the insurance companies or insurance policies. Why insurance policies? Why actually? Why are there insurance policies? Why should people invest or save with the insurance policy? Why should they purchase an insurance policy? So today I'll be discussing the same. Let us know why we really need an insurance policy in our lives and why it's actually um, fundamental in our life. So the first and foremost thing is the tax relief advantage. So in case you are a person who is paying tax and you actually would like to save on your tax or to reduce on your tax burden, an insurance policy is the way to go. So in case you have an insurance policy, you get a 15% tax relief, meaning 15% of your monthly or annually premium is deductible at your pay or how much you're supposed to pay as your tax. Yes, so in case you're planning to save on your tax, an insurance policy is the way to go. The other things is a free life cover for your loved one. In case most of insurance policies have a free life cover and terms and conditions to be observed. It varies in most companies what is required for you to get the free life cover. There's some requirement depending on which company and which policy you are choosing. So in case you have an insurance policy, a free life cover is a plus for you and it helps in case of any eventuality. These things happen and yes, it's better when you're protected than a regret to your family. Another thing is compensation on disabilities, critical illness, or old age. Actually, insurance policies can be used for compensation in case you get a disability or you become permanently disabled. Can be used in case you get a critical illness. These are like cancer, stroke, blood pressure, these critical illnesses which take time to be treated or which are expensive to be treated. And then in case of old age, insurance policies can be used to give you money at your old age as maybe either retirement policies or such. Another thing is tax-free lump sums. Yes, most insurance policies have a tax-free lump sum. This depends on which kind of insurance policy you choose, because there are some insurance policies which don't have lump sums at the end of the policy because maybe they're life covers and they only pay in case of any eventuality, or they act as risk mitigation for risk mitigation factors. So actually know which product you get. Those products which are profit making, which give you the aspect of saving and at the same time your money is earning interest. That's a good one. Yes, so and it gives you the tax free aspect. So what you get after those 10 years or 15 years or 20 years or 5 years is actually tax free. How sweet is that? Yes. And then the other thing is the flexibility. Most if insurance company give you the aspect of flexibility. Flexibility comes in where you can be able to increase your premiums or reduce your premium. Another flexibility comes in where actually you can change one policy to another. Maybe you had a savings plan, now you have a child, you don't want to take another education, to take an education policy, you can actually change depending on which company that is. It's not for all companies, it's depending with which company it is. Another flexibility you get when you invest with insurance company is the fact that you can save affordable premiums depending on how much you can afford. Also, the limit or the minimum depends on which company you choose to invest with. So that's also very important when you invest in, or before you invest. Kindly make sure that you know the minimums and the maximums for the same. There are other flexibilities depending on which company or which insurance policy you choose to invest in. So I'll be discussing various insurance policy, and I'll be able to show how flexible they are on your end. Another thing is protect sorry peace of mind. By the end of the day, when you get insurance policy and you have some people depending on you, you get that peace of mind. I always mention it because it's very important. Peace of mind is very important with the current up and down, with the current condition, with the current rupture of COVID and everything that is happening in the world. Peace of mind is everything. So knowing that in case you went out there and your time is ready, or something was to happen to you and your family is safe, it gives you that peace of mind. Or having a rough year, or having that time where you have spent your money or enjoyed yourself or done whatever you've done with your money, and looking back and seeing that you have an insurance policy may be worth 1 million or 10 million, or you have been able to save this amount of money, it gives you a certain peace of mind. Another thing why insurance policies, the discipline aspects. I think insurance policies is one of the place you have to be disciplined, and they force yourself to be. Actually, in most companies, if you're not disciplined enough and you don't watch out, you might lose your money. Yes, you might lose your money. So if you're not a disciplined saver, an insurance policy is one thing for you. Yes, as you consider other vehicles or financial institution, an insurance policy is also one of the things you should consider. It instills discipline, because you know, if I don't do this, if I don't do this, I lose my money at this point, I lose my money at this point. So you make sure that you're saving so that you can't lose your money at the end of the period. Another thing is value of your money. Yes, most insurance policies are profit earning, either education policy, endowment products, depending on which company you choose to invest with. Most insurance policies are profit making. This means by the end of the day, even if I'm saving my money, it's making me money in form of bonuses by the end of the period. And by the end of the day, whenever we are making money, of course we are happy as financiers, right? That's another thing, and a very important thing. Another thing is protection against any eventuality. In most cases, it's not about compensations in case of anything happening. Sometimes protection against eventualities. I've seen cases where clients are, something happens, or by the time maybe their child is going to school, something happened to their job and they cannot be able to afford that school fees or something like that. That is another thing. It helps you protect yourself against any eventuality, in case you lose your job, in case you're supposed to raise twins, or you have so many people to take care of at the same time. Sometimes you might retain your job, but your dependence increase. Maybe something happens to your parents and you have to take care of them, of you or your siblings, or something happens and your money is committed somewhere else. If you had an insurance policy in form maybe of an education policy or an endowment policy for yourself, my friend, it will save on the same. Another thing why an insurance policy, in case you're a young person and you want to retire early, and you don't want to have the tax implications which are set by Retirement Benefit Authority in case you retire before 65, in the normal pension plans, you can actually choose an insurance policy where you're able to sit down with your insurance provider or your insurance agent. Are they able to explain to you how long your policy can get? And those, most of those tailor-made products actually give you a higher benefits or higher returns than a normal pension plan. The only thing is the discipline aspect, and that one can be worked across if you're looking for returns, and if you're looking for somewhere you're able to actually retire at the right, or when you want, before that set period of time, or earlier than 65 years old. Yes, so these are some of the few most important reasons why you need an insurance policy. I hope these have been helpful to someone, and until next time,